Here, let's go back now to Jim Lebenthal, because, Jim, I understand that we view inflation, some of us of a certain age view inflation as this nasty thing, right? The last time inflation was this hot, the 10-year yield was at 8% and mortgages were 10%. But things are very, very different. Money supply is way higher than that. There are other assets you can invest in as well. And inflation can be good for certain parts of the market. Can it not? Particularly energy, materials, industrials, and you've got the infrastructure bill being passed. You could make a case that there's a very good thing happening with inflation for certain parts of the market, could you not?
You could, and I'm going to answer your question there, but at the end, I want you to tell me what 1982 bands we're going to be listening to if inflation goes higher. I'm not sure if it's Donna Summer or Queen or whomever, but I think just to keep this really simple, people often hear that stocks are a very good hedge against inflation, and they are. Maybe another way of looking at that is that the forces that have inflated goods are also inflating asset prices. If that's low interest rates or the Fed buying bonds, either way, you have to be in the stock market to participate in that. I happen to believe very fully in what you said, which is that early in an economic expansion, which is where I believe we are, and an expansion that is set to continue as bottlenecks are unclogged, and as this infrastructure bill takes hold and progresses this expansion through the coming years, you're going to find the values and the cyclical stocks are where you're going to get the best profit growth. So for the next 6 to 12 months, I definitely see energy stocks, industrials, financials, materials stocks. And people know that I'm about 60% invested in my portfolio in that sector. Most of the rest is in growth at a reasonable price technology stocks, which will do fine. Okay, the FANG stocks will do fine, but those cyclicals and values are going to have higher profit growth, and accordingly, they're going to have higher price increases in their shares.
Yeah. And ironically, The World According to Garp came out in 1982, Jenny Harrington, and the #1 song this week literally was Up Where We Belong by Joe Cocker and Jennifer Warnes. And I do wonder if that sort of is symbolic of the market. I mean, are parts of the market that are inflation sensitive? Inflation can be bad, but it can be good. Are all the parts of the market up where they belong? What would you buy if inflation were to last?
Okay. So we actually just went through this exercise last week, and I've got a list for you. So what we said was, let's say it does last. Then what do you want to own? You want to own companies with higher fixed costs, higher pricing power, lower labor exposure. And so we came up with in our portfolios things like United Rentals, like Chevron, Royal Dutch, which Jim just mentioned, and the financials, American Express, New York Community Bank, things like that where there's pricing power, where they're not dependent on labor. But when you said there are things that are up there and up there where they belong, I think that's tricky. Because what I think you don't want to own is you don't want to own companies that are priced for perfection. And I think that there are a lot that are up where they belong as long as there's not a lot of inflation coming. So actually, we would back off of the FANG stocks. We would back off of really high multiple stocks that it just happen to have high multiple reasons for for whatever they're just trading at 20 or 30 or 40 times earnings. So yeah, I'm not sure that things that are up where they belong will be able to sustain that in a high inflationary environment. So we're really looking more in the weeds. Also, sorry, I meant to mention real estate. I think the real estate investment trusts, they've really lagged over the past couple of years. They could benefit really nicely. They could sail through an inflationary environment. So I would not be looking at the top. I would be looking at the bottom in terms of valuations for where you want to be.
Okay, Joe Terranova, for you, Jonathan Krinsky, Marko Kolanovic of J.P. Morgan saying the inflation trade is, quote, far from crowded. In other words, there is room to make money. Your thoughts?
There is, but I think we have to be careful, and I happen to agree with the strategy that Jenny is defining in terms of allocating towards inflation-friendly assets. Let's remember, equities offer the best hedge against inflation, but understand there are policies that are available. There are tools that can be implemented for President Biden's administration to kind of fight the inflation. Now, first of all, ESG is inflationary in its nature. We understand that. So that component of it, and clearly with the electrification of society and the move to decarbonize society, that's not going to change. But Brian, guess what? We have these tariffs still in place from President Trump's administration. President Biden speaking with President Xi this evening. The quickest fix for President Biden's administration would be to roll back some of these existing tariffs, which without question are inflationary of their nature. So I would kind of keep an eye on that, and I'm not necessarily sure that there aren't various aspects of inflation that clearly are going to be transitory. Yes, some of them related to ESG and wage growth are permanent, but a lot of this is going to be transitory. So I think I'd be careful here concentrating specifically towards inflation protection.